Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just gone midday. A big shout out to everybody that's making the stream today live, and also a big shout out to everybody that is joining us on recording. So, back in the swing of things after Congress. What an absolutely amazing event that was. I hope everybody got a chance to enjoy it, either live or on some of the recordings. Please don't forget, we do have the Congress playlist, which is available through our YouTube channel as well. So don't miss out on that content. It's all available for free. So without messing about too much today, I wanted to take a look at Bitcoin. So we've obviously had a nice little bit of bullish price action to start the week off. I'm someone that normally likes to see how Monday's range develops, but at the same time, I have my opinions on where we are at the moment, and that's something that I want to share with you guys. So please do let me know if there's any issues with the audio or if there's any issues with the visuals. I'm gonna hook you guys up now with the screen. Here we go. So good morning, Razor, my brother. Let's effing go. And Lorenzo, good to see you on the stream, my friend. Good to see everybody today. I hope you're all doing well. I hope you had a nice, relaxing weekend. I had a few days away after Congress with some family just on the coast. We take our dogs away, just nice long walks, bits and pieces, and just looking good. Oh my God, and here we go. If the pressure's not on, it is now. The legend himself, Libsy, on the stream. What an honor, my friend, and an absolute pleasure. Me and you need to get live on your show soon, my man. Right, so without further ado, let's take a look at the charts. So what have we got on here? So as we can see here, I've shared this across Twitter. It's gone out in the Bitcoin report and bits and pieces as well. What I believe is luring price higher is this fair value gap, this inefficiency, right? So what we're looking for when we're looking for one of these, let me just hide this for a second, is we're looking for this 3-candle pattern, this being the first, this being the second, and this being the third candle, okay? What we are doing is we're looking to see if there's a gap between the low of this candle and the high of this candle, in which case, as we can see on here, there absolutely is. So we mark this up as our FVG, our fair value gap, okay? Just do this again, so it's all nice and new. Now, for me, the charts are bullish, right? So we've come down, we've set this low, we've now taken out this high here, right? And we've also set a higher low. Now, the reason that I'm not just jumping into long positions here is because we've got the monthly open, which we're above, which is ideal, all right? And then we've got the weekly open as well, which we're looking at, which is obviously here. Slightly less relevant at the moment, but I'm going to go on to why I always take that into consideration. Now, a really, really key thing for me here is looking at, okay, if we're now above the monthly open, this is bullish. But let's look at what's capping, if I can speak this morning, let's see what's capping the market, okay? So let's get these on our object tree quickly. What have we got? Weekly first. Actually, just hide these and let's put them in fresh, right? So you guys get a full understanding here of how we're marking these out. So going on to a monthly scale, what we're looking for here is the close here, which was November, and then the open, obviously, of December. So what I'm doing is I'm taking a horizontal ray, I'm snapping that down here, all right, onto the open, and I want to see 17,263, all right? So if you hover over the candle here, yeah, and then you look up here, what you get is you get the open of the month. So what have we got? Open should be 17,146, and we click on this here, and we can see here in the dark green 17,146. So now we're just going to mark this out as our monthly open. The reason that we want this on here is it's a key level, right? We want to be looking at that. We want to be looking at that, how price interacts with that. And if it's above it, kind of plays into our bias as well as we're looking for bullishness. Now, difficult to be overly bullish when we're looking at the monthly chart, right? We just had this huge bearish engulfing candle down. However, price doesn't move in a linear fashion, right? What we're looking to play high probability moves. And for me at the moment, after this big flush, it feels like we could see price move up a little bit higher before potentially dropping back down. On a monthly scale, this is the area that I'm looking at, this consolidation here, this demand zone. If we're coming back into this, this is sitting down around about between 12, 10 and 12K. Now, I know that's not a really popular theory, nor am I saying we're definitely going down there. What I am saying is on a monthly scale, not really much else down here that's making me think about it. And if we're looking at our inefficiencies, again, our fair value gaps, we want to really be considering this, right? So when we had this here, we can see how price is drawn down to it here. We lost these lows, which was significant, drawn into this inefficiency here. These inefficiencies over time tend to get filled, right? You tend to want a reflection of an efficient market, all right, buyers and sellers on both sides. So this is why we target these inefficiencies, right? These fair value gaps. So let's delete that for a moment. That's just to give some context of where we are on a monthly scale. Now, obviously, on a weekly scale, we can see here, we've come down this huge bearish engulfing candle here, all right? Afternoon, Spraffers. And yes, Libsy, absolutely looking forward to that. For anybody that doesn't know, Libs is an absolute legend of the Nest, one of the founding members, and is just an absolute dude. You've got to follow him, man. You've got to follow him. Libsy, share your Twitter handle on there for us, please. I don't think I've ever come across someone that has a really kind of cleaner, better understanding of their strategy than Libs. And someone who very openly admits, as all traders should, that most of the fuck ups are our own making, right? As traders, on that side of things, is personal error. I've seen some of his students just making insane returns because, again, we're looking to eliminate that human error. But he has a really, really interesting concept with the reload zone and uses moving averages, which is very similar to how I used to trade or how I do trade in trending markets. So go along and please make sure to give him a follow. We'll grab his Twitter handle for you in a moment. And Spraffers, you legend, good morning. So here we are on a weekly scale, right? Now, once again, let's delete this. I'm looking on what could be drawing price higher. I'm looking at this inefficiency here and I'm saying to myself, okay, if we're decanting this down, we're now looking at this as a weekly fair value gap, right? So once again, what we're looking for here is the first and the third candle, this gap here. Think of it as a void that acts as a magnet for price, right? Price wants to be efficient and you don't need to look too far on a chart to see examples of this, right? So inefficiency here, fair value gap, price has an aggressive sell-off, price comes back up to fill this gap. Now, it doesn't fill it completely, but it doesn't have to, right? What we're playing on, we're talking about the lure, the draw on price into this area, right? Then from here, what we're saying is, okay, we haven't got a full fill here. I still expect at some point, obviously during the next bull run, that we will come up and fill that inefficiency. And to give a sort of closer to home example of something that we traded really well as a group actually was this one. Right? We had this here, we had this drop. Important things here, guys. When I'm discussing price action, I'm looking for liquidity, right? What's drawing price, where we think price is going to react. Then that way, when we're diving into the charts, we can look for high probability setups. So when I'm talking about liquidity, and we can see this is here, the reason that this red line is here, because for me, this is significant, taking out this key low, right? Now, if we break down below this, do we retest this level or come to retest these lows before drawing down further, as we discussed, to the potential destination of the demand zone below? Or is this a deviation? Is this a swing failure pattern where we see, price come in, make this classic move where it comes down, but then we get price come back in again and reverse on us, right? So we don't know. We never know, right? That's the truth of it. Trading isn't about knowing. It's about finding higher probability setups from understanding how price action moves and how markets moves, working that in with seasonal bias, looking at correlated asset divergences, things like we compare it across with different risk assets or counter correlated, as we'll take a look at the DXY, the dollar index, right, which gives us a kind of idea of the market's appetite for risk. Now, BTC and cryptocurrencies are very much a risk asset, okay? So we want to treat them as such. However, before I digress too much, here we can see the fair value gap, drew price up, got our nice fill, and then price continued with its trend. So this is where we are on a weekly scale, right? Now, we've closed another weekly candle here. Yeah, another weekly bullish candle. And we can also mark on here the weekly open, right? So weekly opens here, close of this week, draw it straight across into this week here. Mark this up as our weekly open. Again, the reason those areas are significant for me is because on a monthly and a weekly scale, I'm using that to kind of dictate to me in my mind where price action is sat and where it's likely to push. Now, again, above it, we can always deviate and come back below. But then I know if we do that, you start coming up here, come back below it. Oh, I forgot how terrible the pen tool is on the higher time frames. So we push above it, come back below and lose it, right? Then I think we're talking about high probability setups being to the downside. All right. That's the context of how I'm looking at this. But for right now, I'm feeling like we're kind of drawing up higher into this fair value gap. What happens when we get there? That's something different that we want to assess, right? The other thing I've got marked out here is the liquidity above these highs. All right. If we were to get an extended move higher, but let's remember this is around about 21.4K. All right. So that would signify a very, very big move. For now, we're interested mostly in this inefficiency here. All right. So now we're going to drop it down to our daily scale. And then again, we're just looking for our context. So here, what we can see is this line here, right? This is capping the market for me. Now, why is it capping the market? Because we can see that price has made several attempts, right? 1, 2. Now, this attempt here being the third to close above this, rejected here, rejected here. Now, why do I think this shows strength? Because these rejections here haven't seen the biggest corrections, all right? So we've got this fair value gap here on a daily scale, which again, we look at and we're saying to ourselves, okay, is this a draw on price? Is price looking to come back, fill this inefficiency here before potentially moving any higher? Now, it doesn't have to do that, right? There's nothing to say that it has to, but that's what I'm thinking about at the moment, all right? I'm thinking, does price drop down into here, or do we push up? If we get a daily close above this level here, then I think the chances are that we move higher. But again, we need to wait for Monday's range to develop, and that normally gives us a little better understanding. Nipar, good afternoon, bud. And a good afternoon to Libsy as well. Yeah, absolutely damn right. So, where does that leave us? Well, for me, we've also got this trend line here. We can see from its set here, price has found support here. So again, if we were looking for a real kind of clean confluence here, you know, coming back down into this area, filling the fair value gap, or kind of having a reasonable go at filling it, finding reaction here, maybe a little bit of a deviation. Yeah, God, that's awful. Hang on. So you come back into here, right? Maybe deviating that a bit, maybe not, but then kind of using that as a springboard, right? To then start moving higher. That would be nice and clean. Now, not to say that we're definitely going to get that. We need to be prepared for all eventualities, and we need to respect the time frame. But for me, while we're here, I don't really want to jump into this move here in case this is a deviation, right? We've now run these highs as well. So we don't want to forget that, you know, when we ran these highs here, we had a little pullback, all right? If we're kind of coming into this area, taking out these highs, maybe we are due a correction, but we can defer to the lower time frames to give us a little bit of a better idea, all right? So let's move down to our 4-hour chart and see what that is telling us here. Hey, good morning, George. Good to hear from you, buddy. Thanks for joining the stream. So as we can see down here, I've got this level marked out here, which is liquidity. They're not equal lows, but relative equal lows, as ICT would call them, right? And we're looking for liquidity that sits below here. We've also got liquidity sat below there. And again, as we're looking to come down a little bit, right, we can see as we're down here, right, that we've got this inefficiency, right? Fair value gap lines up almost perfectly with the one that we've got on the higher time frame, all right? So we know the one on the higher time frame is there. So again, we can look to refine this down a little bit, all right, and say that this is where we might see price drawing into. However, what else do we want to take into consideration here? And I bang on about this a lot. I know I do, right? But I think that people discount candlestick patterns. Bear with me 1 second. My tea's been brewing for about 15 minutes. So maybe a slight overbrew, but we prefer it stronger than weaker. And that is strong, actually. So let's have a look in here. So Lorenzo's kicking in with some good banter here as well. So me too. Yeah, awesome. Expecting that kind of pullback. It's not about kind of rushing into the markets, right, guys? You know, you get a lot of FOMO, people coming in here up to this level, and then you can look for these breakouts and they push higher, all right? And And then also Lorenzo saying, if retest of the last high, maybe I see to look for an entry. Yeah, so if it gets up around about that, then we can kind of consider what happens when price gets here. I was very, very tempted this morning, just too early for me when we took out this high. I thought we'd get some kind of correction back. And again, if we look at that here, if we got a good entry on the lower time frames and we can scalp this into here at 1% move, it doesn't sound like a lot, but it makes a lot of sense to kind of come back for this pullback here. One thing I would say is when I was looking at this, I wasn't really seeing any inefficiencies here in the run up, but these kind of moves are very often corrected. And a good friend of mine and a magnificent trader, and obviously one of our legends at the Nest, Razoon, who will be a lot better placed than I to tell you about this with Fibonacci's. But if I was looking at this on a fib perspective, drawing it from that low to this high, we get a little bit of confluence here with our 618. All right, Razor uses an amazing 5-5 level, which is this in-between one, which he keeps front-running me on trades on successfully. But I like seeing kind of deeper corrections into this 618, sometimes the 705. Price corrects back down into here. Let's think about it like this. We've got a corrective move coming down. What are we doing in making that corrective move, right? If we're coming down into this kind of level here, yeah? Well, if we do that before moving higher, let me make that a bit thicker. Then, and let me draw the fibs back as well, so we can actually line that up properly. But if we do get this pullback, right, let's always remember about market structure. Okay, so we're still talking about having, that was quite a good guess actually, wasn't it? But yeah, around that kind of area, we're still holding bullish market structure, right? We've now taken out this high, a good impulsive move through it, which I really, really like to see, all right? I like to see the strength of a move. The way that it goes through the level, right, is telling you that buyers are stepping into the market. Now, as we've got that, we've got this huge wick here. Not sure that would be exactly the same on all exchanges, so do check it out. Some exchanges occasionally have liquidity issues, which means that you get these longer kind of wicks, but we still have to respect it. And even if we're looking at this here, what I'm talking about is this interim swing high here. When this was crossed, we had 1-2 attempts to get through it, then we had a big impulsive move and prices moved higher. Makes sense to me that this would cool off now, come round to this kind of area, in which case we can then start looking for long setups. We can add an extra safety element there by looking down here for our longs if we want to take aggressive longs, right? Because we're coming down into this area. Then if we're taking aggressive longs, we're down here in a good area, right? So for any people that study under ICT, myself included, was a student of ICT, big fan of his stuff, think he's an incredible price action trader. But let me just pop a quick range on here. Range standard, here we go. So, ICT talks about this idea of premium and discount, right? Premium and discount. Now, if you're longing, you want to do it from a discount, which is this. If you guys can see that clearly, here's our 50% of the range. So again, represents a good area down here for high probability longs. If we're looking to go short, we want to do it in premium, right? So that if we're looking to go long up here, the chances are we get on the wrong side of a corrective move, right? So to think of it like that, you don't want a long in premium, you want a long at a discount, right? Everyone loves a discount, and it's the reverse for shorting. So when these things all line up and you get this confluence come together, we can see how these trade plans can materialize, right? And that's why it pays to not rush into trades up here. The other thing that you can do, if you want even more confirmation, is let's say we pull back to this area here. We know what we're talking about with the weekly open. If we get ourselves above the weekly and the monthly open again, right, then what a lovely area to start looking for some long trades there, okay? At which point I'd be discounting this level here because we've clearly cleaned and broken above that. However, at the moment, it still holds significance because if we do break below and then start to break down from here, it shows me this was a deviation, and then this becomes a key area of interest for future trades as well, okay? So some more people in the chat, seeing some legends on here today. Leanne, you beauty. Great to see you on the trade, bud. Brewed or strewed, I need a tea. Damn right, always brewed. I have myself a little one-person teapot. I get in a nice little routine. I used to drink a lot of coffee. I've got an amazing coffee machine. If anyone's into their coffee, get a Sage coffee machine. Mate, they are amazing. We get little local roast houses that roast the beans for us fresh, get them delivered next day. My partner loves coffee. But for me, as you can probably all tell, if you're familiar with my streams before, I talk a lot. I'm quite an up character. So for me, coffee just pushes me over the edge, right? So I missed the routine of making it, though. So I've got myself a lovely little, just a really cheap, cheerful little catering teapot. Anyone from the UK will recognise them from all your roadside cafes and bits and pieces. Just a little stainless steel one. Put a tea bag in there before I go live. Let it brew for like 5-10 minutes. Ideally 10. A little bit of milk. Perfect. Lovely morning breakfast tea. That is the way forward. And good morning. Good morning to everyone. Good morning, Leanne. Lovely to see you on here again. QP's Variety Channel, fantastic. Welcome. Lovely to see you. Lord Tang, my good friend. I'll be seeing you very soon as well. Leanne, yes. We're absolutely shilling Sage on this. Yeah, I should really be speaking to them about some kind of endorsement. But no, in all seriousness, guys, with Christmas and that coming up, if it's something you want to get for a loved one, or even better, you want to wait for the January sales, you can get some amazing deals on them. And just get the ones, you put the fresh roasted beans in there, grinds it all down. It's a proper barista machine, right? So you get the nozzle, you get the head, and then you get the milk frother and bits and pieces like that as well. Quality. But before I digress too much, all right, let's climb back into what we're seeing here. So this is where we are on the 4 hour, right? Now, again, I'm just looking for these high probability targets, and we've kind of highlighted this zone over here, yeah? So if we want to now take this down a little bit more, right, now what we're saying is, okay, where's this coming into? For anybody that isn't aware, let me just share something with you very quickly on how I like to trade these kind of setups. So for me, what I'm looking for is, if I want to go, if this is a key level, right, and I want to go long at this level, what I want to see is, I want to see price kind of coming into here, right? Then, as we're kind of coming into here, I like to see moves like this, right? Where we come down, sweep the lows, then when we get above the highs, right? That's when I'm looking to take entries. So that would be my entry line there, all right? I like to see lows swept, yeah? So this is the manipulation of markets, right? Which again, yeah, ICT, SC, a lot of other people talk about. And again, make sure you're following SC, guys. Learned so much from that guy in my trading career. But he doesn't talk about it in these terms, but these are the kind of moves, that he's looking for. He's got an exceptional way of reading the markets. And the same as all price action traders, for me, I'm looking for the probability of the market's getting pushed down here to manipulate these orders to generate liquidity. And then a sign for me that the market's ready to move higher is then when we take out this high that's taken out the low, yeah? And then looking for a retest of this area, or if there's a fair value gap in here somewhere, I'd be looking for price to draw into that. Now, obviously, it's the opposite for shorts, all right? But that's the kind of key principle that I'm looking for on here, all right? So, AU the great name, love that. Hey BC, doesn't look like we're forming the evening star on the 4 hour chart. Let's have a look. So for me, I'm not someone that really trades those kind of patterns. So it'd be really cool for you to share that for your thoughts. So again, for me, I'm looking at this much more as, are we deviating this key level here before breaking down? If we are, what am I looking at here? Just to give you guys a bit more context that I may have kind of missed out. Well, I'd be looking for this being our kind of range low at that point. I'd be kind of taking this as a range higher. I'd be splitting this here. And I'd be seeing price coming down into our 50 line here, selling off, retesting, selling off, deviation, comes back in, stops at the 50 line, correction, why? To take out the liquidity below these lows, take that out, blitz above it. Now again, remember what I said about how price moves through a level, yeah? You see this move through the level here. Now, when we then pulled back into this fair value gap here that we created, these here were our ideal long setups, here or here, right? And again, we'd monitor them on the lower time frame. So AU, I'm really sorry, buddy. It's not one for me, but that's not to discount your point. I think it could be a very good point. But yeah, if you have a chart or something to share, mate, do by all means, please post it in the nest or come and grab me on Twitter. Be really interested to discuss that further. I know, for example, Axel Kaibar, the CMT, unbelievable guy with chart patterns and stuff. So if you've got any questions or bits and pieces like that as well, do make sure that you check him out on Twitter. So at the moment, we're holding this level quite nicely, right? So let's pop back to our hourly chart and just see where we think price can be pulling. Now, I do like this down here, I have to say, as price comes back in. Obviously, on an hourly scale, we would lose this. Yeah, so you've got this kind of micro high, low, higher, high. You dip back down below it. But again, the market, when the market seems to be in pain, or when everyone's starting to scream bearish, we lose these lows, people see the breakdown, everyone starts to go short. Great areas, those, for market reversals, right? They can often be manipulations that are being used for liquidity generation. But also, whenever we see these impulse moves higher, look at this one. Yeah. Now, it's not exactly the same as this. This has been a little bit more staged, but we've taken it out over a weekend as well. But this aggressive move up here, what happens is people come into the market here and they long too late, right? Now, what happens then is the market gets pushed down here, yeah, to take out all these people, generate liquidity in bundles, yeah, because when you're long, your stop loss becomes a sell order, right? Now, as that drives down and triggers those sell orders, think of it counterintuitively. If you're an institution, yeah, smart money, as people will call it, including ICT and people like that, then you've got some big wedge to throw at the markets, right? So if all your huge buy orders, they need lots of sell orders. So what better way than to create those sell orders by trapping breakout traders to the downside with shorts and also triggering lots of stop losses, yeah, from people that were long and people that were long too late, all right? Now, as price comes into these areas, we see these liquidity sweeps, right? Then what we're saying to ourselves is, okay, what we want to see is a sweep of the lows, yeah, price to break above the highs. And then obviously we would do this on a lower time frame. But then you're talking about, then you can go into here looking for your high probability setups within this area. Okay. Well, that's certainly how I look at it. All right. But for now, looking at this for context on the hourly time frame, I can see that we've come down and we've filled this inefficiency, this fair value gap here. Right, so sticking with our same concept, same principles, we can see what happened here, drawn down into this space. Price now doesn't really seem to be respecting that in a bullish manner, although we do have this long downside wick showing us that there's definitely some action getting bought up, possibly from this area here, this pullback before the move higher. Maybe we expect there to be some orders within here. All right, just pop that in a different color. So blitzing through here, if we hold this, we start to move higher, right? I would still like to see price, yeah, come up above here and hold this area here before considering longs. All right. I don't really want to FOMO into this. If price breaks down below here, would I be interested in shorting it? Probably not, because we're coming into the weekly open and the monthly open. Like I say, on a high time frame, still leaning bullish here. So pull back into this area, like we said, this is our key area of confluence where we've got our Fibonacci golden pocket. All right, we're talking about a key area here of liquidity that can potentially get filled before a move to the upside. So that's why I'll be monitoring that area down here. And in terms of what I'll be looking for, I like breaking these down into sessions. All right, I'm typically targeting New York and London. Yeah, so London into New York and then New York into London close. They're the times that I like to be most active. You see these moves. So this is a short that we had here. Same thing in the London session, New York. See, we broke down, got underneath, monthly open here. We got this retest, broke below this low. We entered on a retest of that breaker line. All right. So that's why I'd be looking for something here. Now, I am definitely getting interested here, because for me, on this kind of time frame, if we start seeing moves like this, so we've now taken out these lows, right? So there's our sweep. Yeah, so we'd be looking for price to now recover above here. Yeah, and then if we see something like that, then I'd really be looking to consider some long positions there. Okay, because if this holds here, and we're saying that we think that there's orders in here, if this is now getting pushed back up from here, then we either get caught in a second liquidity grab above these highs, right, before price then comes back, as we discussed before, or we're playing the higher probability that price is getting ready to move up here because there are just a lot of buy orders sat in this area. All right. So Something else. Something else that we're looking for here, and Tino makes a good point here. And Ayu, you're very welcome, mate. Sorry I couldn't be of more help there. Please don't hesitate to ask questions. Just I don't like to speak about things that aren't really my kind of area of expertise, or expertise sounds like such a knobby term, but an area that I focus in for sure. Now let me just clean this chart up a second. Get rid of these. Right, so yeah, Tino makes a good point here, right? Love the doggy picture as well, by the way. Fair value gaps on the 15-minute, right? So decanting this down again, we can see we have our fair value gap here. So again, when we're looking for confluence here, right, and we can get rid of this one because this has been filled now. So as far as I'm concerned, that's now null and void. All right, we've taken out that inefficiency. It's played its part. But if we're looking for confluence, we've come down to fill this fair value gap on the 15-minute, right? We're now holding this area that we assume that there's buy orders. So again, if we're starting to, I'd want to see this high and probably ideally this high as well taken out. But we've taken out these lows. If we come up, close above these highs, then I look for a retest of this area, as we just said, and then price to move up higher, targeting this high first, yeah? And then we've got extended targets up above. But that's what I'm looking at the moment. That's my kind of train of thought. But I do feel like we kind of probably do purge a little bit lower into this area. So what else do we want to look at here? I like looking at the DXY. Okay, so I'm looking at the DXY here as an area, as something that's counter correlated to risk assets like Bitcoin. All right. So for me, if I'm looking at these key areas here, we can see this area, why this high deviation came back below, had this impulse move higher, retested it. This was then a key area before this big impulsive move higher. So that was of interest. This is a key high time frame level. Okay, 106.97 for me. This, what I like about this is this splits this range between these two levels. All right. So what I'm interested in now is, okay, are we driving this down further? And if we are, where are we likely to go to? Could we be coming down to these lows here? Are we going to find support here? Or maybe the liquidity below these lows down here. So I feel like the dollar can still pull back the DXY. So for anyone that doesn't know, the DXY is the dollar index, which takes the dollar and weighs it up against other currencies heavily weighted towards the euro, right? So what I'm using it for is to say when the dollar index is pumping, yeah, so when we have these strong moves on the dollar, it normally means that risk assets are moving in the opposite direction. And in the opposite manner, when we have these corrective moves on the DXY, it normally means that risk assets are going up. Now, we haven't seen that as much. With crypto in terms of the counter effect, been much more present in indices, right? Like the S&P 500 and the NASDAQ. So we haven't seen that kind of transfer as much into crypto, right? So we will take a look at the moment. All right, we will take a look in a moment. Sorry, but yeah, I think we want to be aware of that. Okay, we want to be aware of that. If it's not playing as well into crypto, then the worry is that we're not going to see that so much. Okay, and let me just give you a bit more context by showing you ES. So look, and let's just take this date for date. So exactly the same principle here. We had this liquidity sweep, yeah? Prices then come up, set this high. Right, obviously this is on a daily scale. Just let me zoom in for you guys so you can see it clearly. Take out the liquidity, set this high, right? We then pull back, we break above this high, yeah? Price then comes into this area here, okay? And then it moves higher. So as we've swept that, as the move starts to go higher, we're talking about 13th of October here when we're setting higher highs, higher lows. If we now switch back to the DXY and we go back to the 13th of October, we can see exactly here the opposite is true. We're setting lower highs and lower lows on the DXY, and we have that corrective move. Now when we look at Bitcoin, yeah, and we go back to the 13th of October, we can see that we started to have this nice move higher. Obviously, we've had key news events and that as well that have come in and have negatively impacted the market, but we failed to keep that momentum. However, maybe now we're looking to kind of catch that up a bit and come back for some of these inefficiencies, right? So that's what I'm looking at in terms of when I'm going across looking at the DXY as well. Okay, so just got a couple of questions here. So fair value gap, 15 minutes. Yep, covered that. Well done, Tino. What about a short squeeze at 17.5 level to 18K? Okay, well, let's take a look. So I think, yeah, we're absolutely at the moment looking at this idea of taking out people that are early players. All right. So let me just pop this on so people can see. So 17.5 and then dropping down. Yeah, I think for me, we could maybe go up to sort of here. I don't really see any confluence as to why we would kind of reverse here on the lower time frames. I think either we kind of push into this high here, as we've done here, and then see a correction back down and then kind of take this out. Or if you're talking about sort of short squeeze, then yeah, maybe we've triggered some of those here and then people start to get short down around here and then we really look to push up. If that's what you mean, buddy. If not, please do let me know. Apologies if I got that wrong. Okay, Dale. So I've watched TA vids, but never heard about the Evening Star pattern. Fair play, eh? Yeah, so guys, do yourselves a favour. Go and type in theburbnest.com. Let me pop it in here for you. w.com/infographics. Right, and you find some amazing stuff over there with all these different patterns, types, and bits and pieces on there. So the Evening Star is a candle pattern, the same way as we have like bullish engulfing candles, bearish engulfing candles, bits and pieces like that. And what they are is they're normally like a reversal pattern, right? So this here, for example, and what the fine chap was mentioning earlier. Now, the reason that I didn't go into it in more detail is just because it's not that I'm not aware of it as a pattern. It's not one that I trade, right? So I don't want to, there'll be people out there better served to give you more detailed information on that. But this here is your Evening Star doji, right? So that's it. And that can be considered a reversal pattern. The other thing that we can see here that's quite of interest here is that we've set on a 4-hour scale an inside bar pattern, right? So this is another chart pattern that you should be aware of, or should be, but it's up to you. Certainly one that I like to take notice of. So what that means, and let me just delete these so we got this clearer. Right, this candle here becomes the mother bar when the following candle closes within the high and the low of the prior candle, right? What we're doing here is we're treating this like a range, yeah? So if price comes down to the lows here, which it's close to doing, if it deviates, it comes back within the range, then we assume that price is heading to the other side of the range. All right, that's how we would look to play an inside bar pattern. But yeah, that's a very good point about that. And do go and have a look at the infographics and that, guys. There's some really amazing ones on there that tell you about chart patterns. One that I do like to trade a lot are our engulfing candles. We can see here at the beginning of this move, we got this bullish engulfing candle. I allow for the bodies because the bodies are exactly what that have the volume. So that's the way that I treat it. So I'm looking at the body of this candle here. It engulfs the prior body, meaning it opens level or slightly below, but closes above. Yeah, so think of it like this. It consumes or engulfs the whole prior candle. This is a bullish pattern, right? We got one here, started this uptrend. This one confirmed it. Then when this one opens, we look for price to trade down, look for our entries on lower time frames, and then we can trade that higher. All right. So you can see this. Just grab yourself a chart, go along and look at this in loads of different ways. You very, very often see them. Bullish engulfing here. All right, we get this bearish engulfing here, right? Again, they don't always work out, but you always want to put them in with context. Again, bearish engulfing opens here, right? But price travels down first before heading up and closing. What you want to see ideally is when that closes, when this one opens, you want to see price travel up, look for the breakdown in market structure here, and then look to trade it lower, all right? See another bullish engulfing here that started this corrective move higher. So candles and candle patterns can be really, really important. For me, I heavily favor the bullish and bearish engulfing candles, but absolutely morning star, dojis, hammer candles, shooting stars, those kind of things. Make sure you're aware of them because they really do give us a good insight because candlesticks don't lie. All right. So Vatsal, ETH chart. Yeah, we can have a quick look at the ETH chart, buddy. No problem. Yeah, really good point here from Dushan, which is Evening Star is a good pattern, very important candle. Yeah, so absolutely make yourself aware of that, guys. Hello from Austria. Hello right back at you, but you've got some really lovely ski weather kicking up at the moment. And there we go, bud. You are more than welcome. Thank you for bringing it up. Thanks for educating the viewers, guys. Always, please feel free to make comments, all right? Right, wet my whistle, get a bit of tea, and let's crack on. So, we've got our kind of trade plan idea here, guys. Maybe we kind of hold here and push higher, but for me, if we do, I like using the 15-minute chart, right? But if we do here, then if we get ourselves into some bullish structure, again, like I said before, I like the fact we've taken out these lows. If we come up here now, yeah, get above, then I think I'd be looking for long plays like that. All right. Like I say, I am expecting a bit of a deeper correction. Maybe come and fill this inefficiency down here. Yeah. But at the same time, if we don't get it, we've got to be ready for it. And in the same vein, it also doesn't mean that, and we've kind of got relatively equal lows here. So we could see something like this maybe. All right. But again, it doesn't mean that I'm just going to blindly long when we get down here. I'd still want to see the reversal patterns on the lower time frames. All right. What Sage coffee machine? Do you know what? That's a really, really good question. Let me have a look. I have got the Barista Express, right? So for anyone that's interested in it, you can get it on a really good sale at the moment. I think I paid about £800, £900 for it a few years ago, but I think you can get them for sort of like £500-600 now. I know it's a lot of money, right? It's certainly not something that we take lightly, but my other half drinks just an insane amount of coffee. And I like coffee. I like it to be good coffee. So it's one of the kind of things that you've got, see it as a lifetime investment because it is really, really, really a good bit of kit if you enjoy your coffee. Right, so here's our trade plan, guys. Also doesn't mean that we're not considering short trade plans. If we really get a nuke down to here, right, something like this, then I think I'd be looking for shorts below the weekly open, all right? And I'd be looking down here at the liquidity below here, right? And then liquidity below here as well to be that draw. So that's how we'd get our high probability short setups. But like I say, on a daily scale, I'm still feeling bullish, right? So let's take a look at ETH. We'll do a quick top down on ETH before we call it a day. Going to be doing a few more streams coming up with you guys soon. Actually, meant to have the camera on this morning. Unfortunately, it is not working for some reason, not registering, but we'll see that more and more in future. Now, let's clear this off and then we'll start from scratch for you guys. So, daily scale, where are we with ETH? So, I'm saying to myself here, okay, well, where are our key levels? Where is it likely to go? So, we've obviously got these naked lows down here, right? Liquidity resting below here, here, and here. We've got equal lows here, right? Or relative equal lows. And then again, remembering, guys, this is on our daily time frame. Yeah, so this is where we've got liquidity sat below here. Now, price has come down and taken out liquidity below here, right? But one thing that gets me with ETH that I just really didn't like is that we failed to sweep this. We came really, really close, but we didn't take out that low. I would have been a lot more confident longing ETH here and here as well, right? Had we swept this low. So I think there's a lot of tempting liquidity sat below there. We've obviously got these, we can see that something's kind of holding price here. Again, very similar to Bitcoin, where we've had this big move down, we've got this inefficiency here. Okay, our fair value gap here. So that for me is what's drawing price higher. Now we never know if we're going to get a full fill of this, but it's always a good place to have an eye on, right? So let's load this up. So this is where we are on a daily scale. Again, we've got this structure here. We've broken above this high. This is now acting as support, right? So we've got the high, the low. We've punched through that. We've had this corrective move lower. It does seem like we could see a move further up, exactly the same as Bitcoin. Now, when we're looking at this here, and we're looking at this is the 4-hour chart that we're on, price has come down to fill this inefficiency here. We've had this kind of move off of here. Obviously, remember, guys, that we're talking about, we've got weekend price action in here. We've had this dip down. As we said before, what I do like about this, where's my brush? Here we go. What I do like about this is we've cleared out these lows, right? With this. And then we've come back above. What I'd really like to see, though, is price get above these highs here, right? Because at the moment, we've kind of got relative equal highs up here, right? So the concern is that we come up, run these again, come back down, yeah, and do something like that. So I'd like to see price come up, do something like this, right? Show us that it's ready to move higher, that the draw is, within the fair value gap here, in which case then we're looking for targets over here. Now we know we've got that on a daily scale, so we can now refine that down and say, okay, well, where are we here? So I quite like this. Yeah, we're looking at a target for price to come up. We're looking to fill that inefficiency. If we get above here, we can trade entries to here with a first target looking up there. All right, and again, taking this down onto the lower time frame, how we'd be looking to execute this. Once again, we want to see some liquidity generated, which we could have here, right? We could have price coming down here, a little bit of liquidity under here. Maybe price has run into here, taken out these stops below here. If we come above this higher, yeah, and we've run that liquidity, retest of this higher could give us some long opportunities into this level up here before we then look to trade it a little bit higher. Again, as we can see here, I like the fact that we're moving in towards New York. All right, that's not the New York Open at the moment. These are just in terms of, this is pre-market. All right, but again, these are the time frames that I look out for. So again, very, very similar here, guys, that we're looking for on, as we're looking for on Bitcoin. Sorry. Now, if we mark this up here, and if we're honest with ourselves and we say to ourselves, okay, well, we don't want to see it, we're taking just an allowance there, so we're not allowing any penetration of that. We're taking it from wick to wick, yeah, or not wick to the corner of the body here, but we're saying if it's support there, support here, came into this region here, if we've now dropped below this, yeah, then maybe we see a retest into this area before a deeper correction, right? However, again, sticking with our plan from earlier, if we're getting back above this, maybe it shows us that we've taken the liquidity from down here and into this area here. And if price gets back above it, we could start looking for some long scalps into this level up here. All right, guys. So that's the way that I'm seeing it this morning. I hope that's been useful for everyone. I know it's kind of rattled on a little bit longer, but I wanted to set the scene. I'm going to try and make these a little bit shorter for people moving forward. Nip Park, quick question at the end. You use black and white theme, which actually looks better. Is there any way to switch between the usual green and red theme and black and white quickly in TradingView? Now, where TradingView can be a bit of a pain in the backside is if you're switching to a multi-chart layout, which I often do, often have a few of my screens split into fours, looking for correlated divergences, bits and pieces like that, then it typically favors the original chart settings, which are your green and red candles. So for me, and I'm really, unfortunately, mate, not the best person to ask about this because I'm technologically challenged. What I do is I'm going into the chart here and I'm changing this manually. All right, so they're the settings that I have for that: body, white, and then black. So we get the black border, but the white candle, then black, 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 and then that's it. I keep that on. But if you switch to multi-screen format, oh, I've really messed up there. Right, if we switch to our multi-screen format here, hang on, why is it not letting me do it? Here we go. So you've got all these different themes here, right? But as you'll see, as this loads up, the other ones load in your traditional colors. All right, I'm sure there's a hack around this to not get it to do it. But that's how it works there. And then if you want to switch just to a single screen at any point, this bottom right hand one here can do that for you. Or obviously you can just go up onto this and just select one screen again. Be aware though, it does use a bit more processor power if we've got that running in the background. All right. So look, guys, have a fantastic week. I'm going to be live again on Wednesday, going live on all formats. So we'll be on Twitter, YouTube, bits and pieces as well. Please do make sure to come and check us out over at the Nest. We've just run through Black Friday, an amazing Congress event. All of that stuff's available for you guys for free on our YouTube channel. If it's something you'd like to consider taking further, I'm sure there's some details down in the description below, and you can always jump on board with a free trial as well. All right, guys. So look, thanks very much for popping along today. It really has been a pleasure. If you've got any questions, do come and follow me on Twitter. You can find me BC_Richfield. All right, pop along and say hi, but do pop along to the Nest as well. We've got an amazing community of people over there. Everyone very education focused, all right? So using this time that we have in this extended bear market to really sharpen our skills and make sure we're the very best versions of ourselves that we can be when the prosperous times return, but also teaching people how to trade these conditions so that you're not a slave just to bull markets. All right, guys, thank you very much for coming along. Have a fantastic week. I'm going to catch you guys around the Nest.